I see so many traders struggle with sizing up, but they're trying to size up at that initial point of the trade. Forget about everything else and everything you read and have heard on CNBC or heard in chat rooms or whatever. A lot of times, a little secret of what you'll find on our desk is,
hey, what's up, everyone? Welcome back to another episode of Trading Takes, presented to you by Investors Underground, the show where we break down the markets, the mindset, and the mechanics of elite trading. I'm your host, Sam, and tonight I've got another very special guest, one of the most respected mentors in the game. He coaches 7- and 8-figure traders and has a stellar reputation himself. In tonight's episode, we're going to do a deep dive into thinking about a trade setup, from the big picture idea all the way down to the finer detail on what separates a good from a great trade. Now let's get into it. Please welcome to the show, Jeff Holden. Jeff, how are you doing?
good. Thanks for having me. I'm excited to be here.
Oh, thank you. No, I'm excited to have you here. And thank you so much it's a glorious sunny day in somewhere near New York. So thank you so much for giving up your time.
Yeah, it's glorious and sunny, but it's also only 45 degrees. So
yeah,
not quite spring and summer yet. But
and I mean, I don't use that. I don't use Fahrenheit, but that sounds cold.
It's not warm.
Yeah, brilliant.
I was joking with our risk manager this morning because he's down in Miami, and I was like, dude, we were on the phone talking about a trade idea, and I was like, dude, my boots have been wet for like 4 days. I can't dry them out. Like, it's just, I cannot get, I don't want to put them on, but every time, but I need to, because I'm going to go outside, and it's just, they've been wet for 4. I'm ready for spring. And he just said, come on down here. And I was like, well, maybe I'll do that. So.
Well, I mean, I think you should. I just got back a couple of weeks ago, and yeah, I mean, I've done the same. I've gone from, in centigrade, it's 25 degrees back down to like 2 or 3 or something. Is pretty much freezing, and it's quite the shock. Let's be real, it's tough.
That's good.
Just to kick things off, just by way of brief introduction, I think a lot of people are going to recognize you, but just briefly introduce yourself and bring people up to speed.
Yeah, my name is Jeff. I'm a trader at heart. I started trading. I don't even know how many years ago now. I always kind of had an interest in markets. And we were kind of talking offline, but it's true. I started thinking that trading was stock picking, and I would get this idea that, Apple's going to go up or Tesla's going to go up. These things that your grandparents or parents taught you of, like, invest in the companies that and they'll do really well and all that. So I started doing that when I was young, and then in college I had a professor who told me this old story about how he took $2,000 of credit card debt. He maxed out his credit cards and turned it into like $120K trading bonds. He was this old guy, and he was like a good professor, but certainly retired. And he was like, yeah, I made 120,000, or he made 100, whatever it was, turned it into 120,000 trading bonds. And I think, and that's where I started to learn that trading is different than investing. That was the first time where I really understood that, trading. And he was like, I would call my broker in between my classes and get prices. And I was like, if he could do it doing that, I could figure some things out. And so I really, that kind of piqued my interest in trading. And so I started trading a little bit on the side. And then I think this is my 7th year at SMB Capital. I recognized, I built an edge as an independent trader, one edge. And was happy with that. And then I, kind of was reaching out. I've always done a good job of reaching out to people and trying to learn from people and see who could really help me build my network of experienced traders. And got in touch with the guys at SMB Capital, went in and met with them one time and recognized that, those traders, the traders on our desk now have, I had one edge in the market, and they have 7 or 8 different edges. And so when my one edge gets a little tighter and a little thinner, they would just transition to the next edge, and they would be trading away. So I recognized, to do this professionally, I needed to be in an environment where I could kind of have more than just one thing that I could do well. And I decided to join the desk, and I've been there 6 or 7 years now. And in that time, I've been able to kind of progress, not just in my trading, but also with the work that I do with other traders. And so my official title, for whatever that means, is head of trader development. What that means is I get to work with a lot of the traders in our desk, and I'm pretty excited about that. I get to structure some of the things that I wish I had learned growing up as a trader. Some of the things that really I think are so important. Basic things like how to go from an idea of a stock's going to go up to actually put together a trade idea. How to collaborate with other traders, how to think about risk and probabilities when you're starting out, when you don't really even have a concept or the experience to be able to do that. Those are all things that I get to work on. And we all kind of tinker a little bit to try and make each class that comes in better and have them get up the curve faster, because ultimately, for me personally, I need to be the guy that gets results. I need to be the guy that has traders that come in and get results. We can't afford ourselves the luxury of sitting there and going, hey, I can crack at this for 4 or 5 years and hope that something turns into something. We're playing for way too high a stakes as professional traders. And I need to be the guy that goes in there, gets results immediately for the traders that work with us.
And that's such a brilliant mission statement as well, in terms of like your goals. And I think that has to be one of the absolute perks of working for, such a reputable firm like SMB is, you got that passion that is obviously is just coming across the screen right now, but you get to work with so many people on a daily basis. That just must be incredible.
It's fun. I feel really lucky to be surrounded by some of the people who I think are some of the best traders in our space. But also just some of the genuinely best people I've come across. People who are talking about their goals outside of trading just as much as they're talking about their goals within trading. And when they're talking about our goals, or when they're talking about their goals, it's not with this idea of, oh, maybe that'll happen sometime. It almost seems like it's going to happen for them for most of the time. And it's just the type of people that you feel excited to be around. So I feel really lucky for that. But I've been astounded with the growth of the trading community in general. Traders, I know that there are a lot of people that come in and then don't ever reach out. Maybe they post a couple things on X, or maybe they're talking with some other people here and there, and then kind of pull away from that. And I understand trading is really hard, and it's easy to kind of shell up when things aren't going the way that you want it to, or the way you expected. But the trading community as a whole, especially the intraday trading community, is such a powerful group of people. Yeah. And I have not come across very many people who aren't genuinely interested in helping others. And that's something that makes this entire group such a special part of, such a special thing to be a part of. Although we play our small part as professional traders, I think the independent trading space is such an amazing place filled with such incredible people that it's so much fun.
Yeah, it's amazing. And it's funny actually that like now there are people who I've never met who are actually someone like I'd consider them a close friend, and I'm telling them good news that's happening in my life, and I've never met them. I'm telling them before friends who I might see on a daily basis. So you got to
go to Miami more often for a Lance event, or you got to get to Vegas.
I wish hopefully I get an invite again. That was incredible. Yeah. Again, meeting so many people. I'm there sharing. I met a few of his old Trillium colleagues, and we're there just having far too many cocktails, having an absolutely great time. And actually, sometimes it's quite funny, really. I think that you fly across the world to meet traders, and you end up chatting actually about anything but trading, and you're just getting on, and it's such a good.
Oh, you guys had plenty of cocktails then, because usually there's this like tipping point in the evening, right, where it's like we go from talking about trading, and then you have a couple cocktails, and everybody starts telling really good stories about their trading, wow. and then you have too many cocktails, and then you start talking about life again. Yeah, so, it's like this weird curve.
So that is literally what happened. I like a spicy cocktail, and obviously like the service in the US is so good, and they just kept bringing around this. It was called a Mexican kiss, and I just kept saying yes please, and like I'm drinking them like they're a beer or something, and before I know it. But anyways, now we're going to go off on a tangent. So I can talk about my drinking habits all day. But you said something there that I think like is particularly important for not just for tonight's conversation, but like trading in general. And it's something that Lance mentioned as well when I spoke to him, is that a lot of people do think trading is about ideas, and it will be, oh, I think Apple's going to go up today, or I've just bought an Apple phone, so that means, or whatever it is. So could you highlight then the difference between and the importance of shifting from idea-based and how it actually translates and actually what you can trade, what is a setup, and why that's important?
Yeah, I mean, so we get to work with Dr. Steenbarger, we work with Dr. Katz a little bit, and not formally, but informally. And then we obviously have some good people on our desk. And Dr. Steenbarger's worked with a lot of different people, some pretty big hedge funds. If you look them up, you'll know exactly who we're probably talking about and what fund. But he was talking about one of the heads of this huge fund, and we were having this email exchange today about a lot of things. But me, Dr. Katz, Dr. Steenbarger, and Bella was on the email exchange as well, and we were talking about performance ultimately, right? But one of the things that was so fascinating about this was the discussion quickly turned to exactly that topic. The idea generation element of what we do as traders. And it's not enough to have that core thesis and then kind of say, all right, maybe that's an idea. And even Dr. Steenbarger said, yeah, the head of this firm, as soon as somebody would throw out some random idea, he would start to roll his eyes and he would say, what is the trade? Mm-hmm. And that grounding philosophy should be a part of everything we do, because what is the actual trade that you're trying to make? You have to understand that, and you have to be able to answer that. The actual trade is often 2 or 3 iterations of that idea, and it doesn't take that much effort to go from the idea of the trade into the trade itself. But it's this thing that I love the phrase. I can't remember where it came from. I think some trader told it to me because he had read some book, but it's easy to do, to take that idea and turn it into a trade, but it's much easier not to do. Mm-hmm. And the fact that it's just easy to do, but it's so much easier not to do, is the biggest crutch for a lot of people. And we'll fall victim to that. We were watching some of the tariff commentary today, and it's people were like, well, if it does this, then maybe this will happen. Or if it does this, then maybe this will happen. But none of those are trade ideas. And we really had to force ourselves to really bring that out in the conversation. What's the actual trade idea? Well, if we get above this range, hold above it with increasing volume after this announcement, that's a real trade. It's not enough to kind of come in with ideas, because everybody has ideas. And a lot of people have really good ideas. But without the trade, you don't have execution rules. Without the trade, you don't actually have an ability to manage your risk the right way. And that's ultimately the business that we're in, is growing traders into 7- and 8-figure traders. You have to be really, really precise with your risk controls in order to grow at that scale.
And just touch on that. There's 2 things there, because I most certainly, you don't want to be the guy that has all these ideas, but then never trades and never executes, which we see. I think we do see a lot of that. And you're like somehow you have to find that, like you said, go into some detail, go into some minutiae, and actually translate that into a trade idea. But obviously you just touched on that then, is about the importance of risk management. And is that the baseline then for every trading setup for you and your guys?
The risk management?
Yeah.
Yeah, I mean, it's the probabilities are really kind of what we're talking about, I think, more than the risk management part of it. So I think you have to get the probabilities generally right. What we really get into is the detail-oriented nature, where we talk about trade ideas. So, even in that, taking it from this broad idea into an actual trade, you heard me talk about gets above this level, holds above this level, volumes increasing, other market participation. Those are all variables that really contribute, or they detract from the probability of that trade actually working. So once we get that probability kind of scoped, that's where we can talk about risk. We don't come up with that specific percent. I know, we love to talk about EV, and we do a lot about thinking about EV, but I think you just kind of have to get in the ballpark with your EV equation, and then let that be enough. The thing that you can't just kind of get in the ballpark of is your risk equation, though.
Yeah.
because you can't say I'm sort of risking, $2,000, but maybe I'm risking up to $4,000, because you're talking about a huge disparity in the quality of the opportunity. So,
So that's where it goes. That's where it always goes wrong as well. When there's some sort of loose figure in your head, it's like, because then you just let your size just slide in terms of levels you never expected to see, and then you got no plan then.
And the worst part is when it does slide from that 2 to 4. A lot of times it happens so quickly that it's tough for your mind to conceptually grasp what's actually happening. I think as humans, we're not really programmed. I read this book and it was talking about we're not really programmed to handle exponential. We're really well programmed to handle linear. Mm-hmm. But you think about usually when that goes wrong, it's starting at you're down $1,000, and then you're down $1,500, and then you're down $2,000, and all of a sudden you're down $3,500. Yeah. And it's like that exponentially going wrong. It happens so quickly that our brains can't really process that. But if you have a plan in place to begin with of, I know I'm going to lose, I can risk up to X amount. A lot of times a little secret of what you'll find on our desk is, even if traders are saying I can risk up to, call it 2,000 or 5,000 or 100,000, it doesn't really matter. A lot of times they're trying to beat that risk. So if the trade starts to not work, they're actually trying to lose less than that amount. Yeah. And there are a lot of ways that traders will do that, whether it's through using options as a hedge, a hedge portion of the trade, or whether it's just reading the tape and making some adjustments when you see things that aren't working out. But, whatever that number is, they're trying to lose less than that, even when things just don't go right. And it's because, if you hit that number, like, it can get a really slippery slope of things going against you. You have to be so careful with those numbers, but you do have to generally understand the probabilities first, because otherwise you're just randomly pulling out numbers.
Yeah, and it very much sounds like you're talking about those probabilities instead of predictions. And then I suppose as well, like the probabilities, there's that layer to it as well. You're talking about, like in your example, reclaiming a level, expanding volume, expanding range, etc. And then all of a sudden, like that probability, I assume as well, is going to be that sliding scale of something going quite drastically in your favor, or perhaps the opposite.
Yeah, it's like, when you have an idea, maybe it starts as a C idea, but then you have another check in your favor and it goes to a B idea. And then you get 2 or 3 more checks in your favor and it goes to an A idea. And you want to be in those trades with size. You don't want to be in the trades with size that it starts as an A idea and then it turns into a B idea and then it turns into a C idea. Those are the ones you have to watch out for. We've had a couple of those happen on the desk. We're getting better at not letting that happen. I've certainly been involved in a couple of those where you go in and you have, everything seems right. And what's the worst is, like, even when everything seems right and then it starts to tick in your favor, then all of a sudden things change so quickly and it starts to go bad so quickly. And it's like, you've just put on all this risk and it started to go in your favor and then went against you. And it's like, you really have to kind of train yourself to say, I'll take this off. I'll really make sure to reset. Trading in a community helps, because if you're responsible for your idea to the people that you're talking with on a regular basis, it's a lot easier for them. You don't want to put the expectation on them to call you out for it. But, if you don't want to let them down, which is really a part of why you want to trade in a community or with even a couple other people, you want to grow together. And it's so much fun to celebrate the victories than it is to sit there and lament about the losses. Especially when they're kind of unforced errors, as people say, where it's like the trade started to work and then it didn't work and then you turn it into the bad trade. Nobody wants to sit around and talk about those. They happen, but it's so much more fun to talk about the ones that you started to see it evolve, and then it really started to evolve and you put on more risk and then it played out, as well or better than expected. Those are the really fun ones. Those are the ones that when we hit that curve of we've had enough cocktails, those are the fun ones to talk about.
I'm going to say, when you get to that cocktail stage, it's just the two extremes. Just touching on that then. So, like, in terms of, you touched on like a C to a B to an A grade then. So in your mind, then, what makes a good setup? What makes, like, and perhaps going back from that basic idea of that idea, what translates that into this is a good setup?
Yeah, I mean, there are a couple components. The big one is depending on the price action a little bit. When you have the right price action, you really can watch the trade evolve. And what I mean by price action is simply, are the other participants acting in the way that I expect them to act in this moment?
Mm-hmm.
Are they doing what I'm expecting them to do, or are they not? And if they're not, the price action, the way the stock's trading, isn't going to reflect that.
Mm-hmm.
Very simply, if I have an idea that a stock's going to go higher, well, start by asking yourself, well, how do you think it's going to go higher? Are momentum funds going to be buying it? Or are they going to be, buying it with a lack of price sensitivity, which means they're going to be pretty aggressive with it? Or are they going to buy it really passively, where it's going to go up, maybe look like it'll break out, and then everybody that chases it up will kind of get in a little pain as it starts to grind back down, but it's really just trending higher. So you want to kind of think about that element of it, and that helps you put together this trade idea. Particularly in shorting, you have to be a little bit careful, because that a crap company should just implode. But if it doesn't, if you don't see that really reluctant buying and forced selling almost, you can't really sit there and say, I'm responsibly staying short this. You might kind of get caught in something that you didn't want to get caught in. You might have to make some adjustments, but you really do want to kind of see the price responding in the structure that you think the participants should be responding in.
That's such a great point. And I think particularly like you said, if you're specializing or you are in shorting something, then a lot of these companies that we are, like, particularly if you focus on small caps, they're all bad, right? And that's the thing, they're all probably.
But even within that, there is a magnitude of bad. There is such a difference in a bad company and a really bad company and a total garbage. Like I think we were talking about it, and it's like the level of magnitude of bad, even for NASDAQ listed companies, is like a company can literally be 1,000 times worse than another NASDAQ listed company. That's how bad that scale is. Like, that's what's crazy about it. It can be 1,000 times worse.
But it's such like if you have like something that's truly garbage, and it's like, again, it's like that idea. I know this is a zero, but that doesn't mean that you can just short and forget about everything else, and I think that's actually an area that I need to improve on a lot. And I think that's such a great question that you ask yourself is, are the participants behaving how I expect them to? Like, is this price action how I expect it to behave? And then there's always that reset button to then go, okay, not right now, but if something changes, I can get back in, or I can see actually if this develops, because that's probably when actually setups develop from that C to a B or that B to an A.
And that's why a lot of times, and with all of our traders starting out, we start them with scalping. The reason is because you can sidestep a lot of that, and you can really focus on the very small moments that matter in that whole trade idea. So, there were traders today trading UPST in both directions, right? So we had that really good, huge move up, and then we had that just absolute complete decline on the backside of it today. And what was fascinating was the traders that were like, this is going to 100, all of a sudden had to endure all that pain as it completely went the other way, where the traders that were just scalping it were finding those little moments on the way up and then those little moments on the way down, because you're not forcing yourself into an idea. You're actually just getting this broad idea and then trading kind of what shows up on the chart. So you go away from the predictive nature that really can cost us a lot of money and get us in a lot of trouble. And you get into that reactive nature where you're only looking at the key moments. And I'm not talking about like tape scalping, right? I'm not talking about seeing like that NVIDIA, I think it was 135, like offer lift today and it sprayed up 1.5 points. Like, I'm not talking about tape scalping. We're talking about very clear patterns that are occurring. And that's what we teach our traders starting out, is because if you can trade those patterns, if you can trade that price action where you're understanding the way that other participants are acting, even if it's for a 5-minute period, if you can pick that off, you have a high probability trade. Yeah. And then you can start to build some momentum where over time you're recognizing, okay, for this 5 or 10 minute period, or maybe it's an hour or something like that, I understand what's happening in the market. I understand what the other participants, the big players, are doing. Yeah. And if I can understand that little portion of it, it's not that big of a leap for me to understand the entirety of the trade, the entirety of the idea, but I have to have that little portion right. And that's where I can really start to build some momentum in my trading career.
Yeah, that's such a good point and such a good foundation as well. And I think it also links back because I assume as well that they get to a point where they're so used to that, it's almost like their mouse or their hotkeys, they just start clicking them automatically as well because it's just so ingrained. And it's funny because that's often like how I always think my best trading is when I've got like some sort of plan and I just suddenly start clicking things without really thinking about it because I see my signal and I'm like, bang, I know exactly what to do here.
Yeah, and that's the thing. Like, I would bet, and I've seen this from my trading, and I've seen it from a lot of other people's trading too. It's that it's not just you know what to do, and then you see your signal and you take it. It's that as soon as you see your signal, there are three parts of the chart, right? So there's the left side of the chart that you have to look at. You have to understand what's been happening. And then there's that point of entry, that signal that you're talking about, right? We built this scalp radar tool to essentially get you from the left side of the chart to that signal, right? It kicks out signals. It kind of helps you understand, okay, when I get this signal, I need to look left. And if I can look left, I can understand a lot of what's happening on the chart and whether or not this trade is a good trade for me to even pay attention to. But then it's what happens on the right that matters. And what you're talking about when you're not thinking, a lot of times it's probably you have what's happened on the left lined up. Mm-hmm. That moment of entry is the right signal at the right time. But then what happens on the right of the chart is probably something that contextually makes sense to you. You're like, well, of course you would act this way. Mm-hmm. And when that happens, there's this peace that occurs within a lot of us. And even I think it takes a little time to develop it and a little trust in yourself that, yeah, I've actually seen this before. I can recognize this situation. And what you're saying is it's not the way the stock is trading. It's the way the participants who are involved in that stock in that moment are acting. Mm-hmm. You know, if they're acting in the way that you expect them to act, it's almost like this, you know, yeah, of course this is happening. Like this is doing exactly what I expect it to do. Mm-hmm. You know, like it's not being predictive at all. It's actually just being responsive to what's occurring. But that typically is a lot of what our best trading looks like, and because it is a little bit, it's calm, it's not mindless, it's sort of being in that flow state that a lot of people talk about, where you recognize, okay, I've observed the left of the chart, I see my point of entry, now what's happening on the right of the chart makes total sense to me. It's like you're, for this one beautiful moment in your trade, you're kind of lined up with what's happening with what the other participants are doing. And it's really like, I think that's that feeling that we all love in trading.
Yeah, and it's such a good point. I mean, it's like when you say that is that flow state of, because it's linking back to like what we spoken about, like the times where I am actively like almost feel like sometimes if I'm thinking too hard, that's because I'm looking for something that's not there. And the times are actually that I'm just in flow, that I am just reacting. Like you said, I'm aware of what's on the left. I plan for a scenario, then the scenario lines up perfectly. And then then it's like, okay, are the participants happening? Is it the price action as I expected? And it's just tick, tick. And then you just, I mean, hopefully it then just goes in your favor and doesn't, and your stress levels don't go crazy.
Yeah, well, that's where a lot of times you actually have to guard yourself against that, because a lot of times when it does work exactly the right way, you have to be thinking, okay, what's the next trade in the same idea? What's the next trade here? I know. Like Short Bear has a couple things out on pyramiding in and out of positions and stuff like that. And you do have to train yourself as you get bigger to think about, okay, what's the next trade? What's the next trade? What's the next trade? Because, you're not saying, how can I get bigger? You're actually seeing, okay, if this broader narrative is playing out, what's the next logical thing that's going to happen? Okay, it's going to pop. It's going to retrace into a level. Okay, that's a place for me to put on more risk, right? Mm-hmm. And that's an easy way to start growing your trading. You don't actually size up at the point where you're not really sure. You size up as the trade starts to progress in the way that makes sense to you. And what you're really doing is combining scalps. So, like you've got that first scalp lower, and then maybe you get a second chance, like a retrace into a key level. You see the turn on the tape. You're like, okay, now I'm putting on a different trade entirely. Different risk points, different spots, but now I'm putting on a different trade entirely. And I see so many traders struggle with sizing up, but they're trying to size up at that initial point of the trade versus sizing up by just taking other trades that are presented to them. And if they just take the other trades, then you're like adding more exposure to the idea, but you're not sizing up in an appropriate way. You're sizing up when the trade goes from a B plus to an A or something like that. You're not sizing up when it's sort of a B, and then depending on what happens, it could go to like an A really quickly and then turn into a C. Like, you have to be really careful with when you're trying to push your size. And I think that's one of the hardest things for independent traders to do, and hardest things for professional traders to do, honestly, is start to get to that point where you can size up.
We aren't dealing in any certainties. So to suddenly go, I'm going to go XL on this trade, and obviously to apply that size at the moment, actually, when it actually is not in your favor yet, or it's least likely to work, seems a little bit, I mean, it's very difficult to do. It's very difficult to suddenly, like it's saying, like put all your size in the lows and then suddenly it works. I just haven't been able to do that. And the same, obviously, if you're on the short side, you see that entry signal and it's like, can you deploy all your size in that moment? I find that quite hard. But as you get confirmation, as obviously the trade goes, the probability goes increasingly in your favor, that's when actually you can go, okay, I can keep adding and I can scale up here.
Yeah, and thinking about it as a series of scalps versus an entire trade kind of helps take some of that pressure off. There are all these little psychological tricks. I mean, all of us are human, right? So like, there are all these little psychological tricks that we need to take advantage of. And one of them is not trying to put on your max risk at that key point, right? At that moment at the lows. Like, that's a fun thing. And some people can do it exceptionally well. The poster behind me, the mural behind me, if you see it, swing the bat hard, like, we truly believe in that. But swinging the bat hard is different for everybody. Maybe you're like, I'm going to be 20% bigger off the lows, 10% bigger than I usually would be. We used to play this game on the desk that was like, you would like force yourself to be 10 shares bigger than you wanted to be. And this is like right when we were starting out, right? So we were all really small and everything, but like, whatever your size would be that you would say, you would have to be at least 10 shares bigger. And it doesn't sound like a lot, but like, just the act of forcing yourself to be bigger is a place to start. And, if you're like, I need to be 20% bigger, then your mind's doing math at the wrong time. Yeah. And it's like trying to figure that out. But if you're like, I just need 10 more shares, right? If I just get 10 more shares, that's fine. And that can be my win for today. And then you just kind of build off of that momentum. The key though, and the funny thing that happens is then you have to then keep adding 10 shares every time you want to take off. So if you really want to start to push yourself in your risk, every time you initially want to take off, you have to be thinking, so say you get I don't know what your position sizing is, but like, let's say you're trading, $5,000 is a risk for you, right? I have no idea. It could be $150,000, but like, let's say $5,000 is a risk for you, right? Maybe you're risking $5,000 total in that trade, and you force yourself to be a touch bigger, and you're risking $5,100, right? And all of a sudden the trade starts to work and you're like, I got to take some off. And as soon as you tell yourself that you got to take some off, you actually have to almost reprogram your brain to think, no, I have to be 10 shares bigger now. I have to be looking for the next trade, because when it's really working and everything's lined up, the worst thing you can do is start to piece out too quickly. The worst thing you can do is say, I'm going to sell half here and let the rest of it run, because you're just taking away all the EV that was just literally handed to you.
Yeah.
So at least having that mindset of in the bigger ops, and I'm not saying that do this in everything, but in those bigger opportunities, think, I need to be 10 shares bigger. I need to find a way to get another trade to be 10 shares bigger. And if you do that, then you're changing the dynamic in your mind from I've got to protect myself to I've got to stay the aggressor here. I got to remain aggressive here. And, it doesn't sound like a lot. And if you told Nate, hey, I'm just trying to get 10 shares bigger, he might kind of chuckle.
He'd laugh at me,
yeah. But like, you got to start somewhere. And believe me, I've seen traders who that 10 shares all of a sudden goes to 10,000 shares bigger. And, it takes a little time, but you have to get over that psychological hurdle first. And it's a real hurdle that a lot of people face. And a lot of people just say, oh, trade bigger, you'll be fine. You have to be bigger at this point. But there are a ton of different ways to solve these problems. And just because one person was able to solve it one way doesn't mean you're going to be able to solve it in that same way.
I think that point is going to be And that's going to resonate with so many people, because it's like such a common question, actually, like, how do I size up? But that's actually a way that people can do it. And I'm just thinking already, because I use hotkeys with my risk, and I could just be as simple as I could just have like a plus 5%. Or
it sounds like if you use hotkeys, you should do the other thing that we've heard on our desk, which is you should add a 0 and then press the button twice. Yeah, that one goes.
That's quite a step. Yeah,
it's a step. It's a step, but that's there's a trader on our desk who very famously said that at one point. He was like, "Man, when you get that, just add a 0, then press the button twice."
I think, because I think he was at Traders for a Cause a couple of years ago, and I think Nate mentioned that haven't you just got like a 2R button or whatever that you just double tap and you're like, bang, I've got some size here.
But it's good. And like that's the thing. Like, so much of this can be automated with hotkeys. So you could have a plus 10 share hotkey, right? So you press your button and then you're forcing yourself to press the button again, right? And it's 10 shares. It's probably pretty inconsequential. Maybe it's 100 shares. Who knows? But whatever it is, you want to just put yourself in the mindset of being the aggressor in those big opportunities. And even you can practice it on intraday opportunities. We talk about trading. A trading career is really a baseline. So you have your baseline trades, right? So scalps are just, for the most part, baseline trades. Mm-hmm. They're things that you do day in and day out. Somebody sent me this clip from Will Smith the other day talking about running on a treadmill. And he's like, he'll he will outwork everybody, is what he says in this. And he talks about like building a wall and all that stuff. And it's like you lay one brick perfectly at a time. And that's what we're doing most of the time in trading, right? Most trading days we're coming in and we're trying to make some money in the markets. We're trying to put up, decent P&L. But really what we're doing is building our trading skills, and we're building the right habits. And if we're doing that day in and day out and challenging ourselves just a little bit each day, then all of a sudden it gets a lot easier to challenge ourselves in those big opportunities. Yeah. But you have to be looking for those opportunities, even on those baseline trades. If you have baseline plus A plus, and you can execute both those, you're going to have a really successful trading career. But you have to have your baseline together first, and then you can really go after those A plus trades in a much better way. And you have to be as diligent with your baseline trades as you are with the A plus opportunities, because it's tough. You can't sit there and go, I haven't practiced, I haven't done anything. Who's that tennis player that like famously like doesn't practice anymore? He's like, I just skip practice all the time. And then he goes and like bangs rackets and fights with everybody. And he's like the most talented player, like naturally talented player. But it's like, he can't just show up and win tournaments. Like, you actually have to like be diligent with that baseline activity every day.
Yeah. And it's funny, that reminds me of the coach who worked with Michael Jordan. I've read his book. I forget his name, but he used to. Yes, yeah. But he talked about like he just asked Michael one question, it'd be 6 or 7, like what time are they in the gym in the morning, and he just said, isn't it a funny coincidence that the most talented player is also the most hardworking as well?
Yeah. And that's, I would say that's probably true of some of the more successful traders on our desk, is they're intensely passionate about markets, and the conversation's always about trading and about trading related things. But I think the biggest thing is they hold themselves to a really high standard when it comes to trading. Yeah. Right? They really approach this as if this is something they've been called to do. And they're acting as if this is something that they really want to do. If we unfortunately, it almost still gives me chills, but we had to let a trader go the other day, and it was like, it was so sad to see that moment. But the reality of the situation was they weren't acting like they wanted to be there, right? They were doing a lot of good things, but they weren't doing it in a way that showed like, this is what I want to do. And for you, for all the people listening, like, you're doing the things that show this is what you want to do. Like, you're talking with each other about trade ideas. You're not just randomly calling things out in the middle of the day saying, oh, look, this broke a level. You're actually saying it broke a level. If I see this, then my stop goes here. Here's my target based on my stop, based on knowing where my stop is. This is going to be my position sizing. Maybe you're even saying plus 10 on the shares account,
tomorrow, like, plus 10.
Yeah. And so everybody that trades with you should be calling you out. If you're not, is this a plus 10 trade? Like, and you have to kind of have a little ability to recognize when it's not, but sometimes it really is. And when it is, you just have to do something about it.
Yeah.
The worst feeling in the world is sitting there and not doing anything about it when that opportunity is presented to you, because you think about all the things that have to turn into the exact right moment for us as traders. And over the course of your trading career, my trading career, we've all seen hundreds, maybe thousands of those exact right moments.
Mm-hmm.
As intraday traders, we're trained to see those moments better than anybody else in this space.
Yeah.
We can recognize when that algo flips on or when it flips off. We can recognize when that buyer drops, and that buyer that's been there for 3 or 4 or 5 days, all of a sudden, every time it dipped, it rebid. And then all of a sudden that buyer's not there. We know that that's the change.
Mm-hmm.
But a lot of times it's tough for us psychologically to be like, I know that's the change. Now I need to get bigger. I need to stay the aggressor. I need to be pushing it. But if you can't do that even on a small amount, it's really hard to do it on a big amount. And it winds up with people making more mistakes than they really need to.
Yeah, that's such a powerful call to arms. And on that it as well, like, I'm just intrigued as well by, you touched on that like sense of urgency as well. And I'm assuming that in an environment like SMB Capital, that I always think like now is the moment, like every single day. I mean, it must be quite tough at times, because it must be like every day you've just got to be at it and on your game. Is that a differentiator between perhaps those that aren't typically as successful and those that are, they're just on it all the time?
I don't think so. I think that there's an element of that on all the time, but what you'll see is there's a drastic difference in the energy levels when there's a lot of opportunity from when there's not. I mean, we were talking about it a little bit before we started this, but when there's not a tremendous amount of trading opportunity, like there's been really good trading lately, right? And I think it seems like that'll continue for a while. You get a lot of base hit type trades, right? You get a lot of baseline trades right now. We're not getting the A+ opportunities, but you're getting a ton of baseline trades. The number of ideas people are talking about, different ideas entirely, different trades entirely, maybe it's gone from everybody talking about 5 ideas in our morning meetings to 20 different ideas getting put out there, right?
Mm-hmm.
So many of us are constantly thinking, what would make this a really good trade? What would make this a really good trade, right? And so the energy level actually goes down, and you're still diligent with the work that you're doing and the way that you're pursuing your goal, the way that you're putting in work each day, and you're starting very broad with the things that you want to do, because we don't control when the next big opportunities are going to come up. We just kind of can sit there and do what we're here to do.
Yeah.
I don't view that as the same intensity as when there are really good trading ideas, really good trading opportunities starting to ramp up. The intensity level goes up. It's almost like traders are able to find another gear when it really amps up. And I know we've all interacted with traders that are just like, they're at their best at the biggest moments.
Mm-hmm. Yeah.
But, I don't think some people are able to do that a little bit more naturally. But I think it's the people that are constantly thinking, what is the biggest moment? What is the biggest moment? Even if it's a C trade, where's that pivotal moment in the tape where something changes, that's the spot where I can get my size? Okay, how do I work on that day in and day out? And it's like a game. And so there's not pressure on it because there's not like the same risk level that's being taken at all. I think it's actually more draining if you're putting so much pressure on yourself in those like B and C trades, those baseline trades, versus approaching it with a little bit of a lighthearted attitude that really is like, hey, this is an opportunity for me to work on my craft.
Yeah.
Right. And if this is just an opportunity for me to work on my craft, great. I'll work on my craft. Thank you for this opportunity. I'm happy to do this. But when it really comes to the big opportunities, that's when I start to amp up with that intensity. And that's where it really gets it actually gets interesting on the desk, because we were on a call earlier this year with one of the big trades, and somebody was like, Jeff, you're so eerily calm in those bigger moments. And I was like, what do you mean? Like, I didn't even realize that it was happening, but it's just, you're just there and you're observing it. And, it's like you're quieter and you're more intense and you're more focused and everything. But the tonality of your voice changes to just so matter of fact of, this is happening, this is what I'm doing. This is happening, this is what I'm doing. And I think there's a lot of those little things that you develop over time, but you kind of only develop them by doing that on the baseline stuff day in and day out.
Yeah, that's such a great point. That's powerful. It just sounds like you're embracing yourself for that state of flow as well, where you're just gonna just execute flawlessly.
It's hard to do, right? Like executing flawlessly is a total. I bet you I could name on one hand the number of times where I would say I executed that perfectly. Like out of all of my trades that I've ever taken, like maybe I've executed things really well, but there's always like, I could have been bigger here. It could have been, this or that or whatever. I'm okay with that. Right. I'm a generalist when it comes to all this stuff anyway. I don't ever sit there and go, Jeff, you should have made, X plus X. And if you just do that, I know some people do that as a little trick. They will study how much they could have made had they executed the right way. I never found that worked for me. I actually found what worked for me was going back and studying the moments that were the most important moments in those trades and thinking through, what was I doing in that moment? What was my self-talk in that moment? Was I saying, oh, I just hope this turns back down so I can get out of this now uncomfortable position? Or was I recognizing that was a decent moment to maybe put some more risk on? What was my self-talk in that? And then by training that, I feel like I'm kind of putting myself in a good position over and over again. But there is that side of it that I don't really feel like I executed it perfectly. I always wish I could get bigger size, or, maybe should have covered a little bit faster, maybe should, whatever it was. And that's okay. I mean, I think across the board, traders on our desk are constantly thinking about what you could have done better. It is a little draining because, maybe you're not so satisfied or whatever. But, I think that's okay.
Yeah, you certainly added a human element to that, and that's reassuring as well, because I do think, I think ultimately, as much as we, do pursue perfection, it's largely not achievable, and it won't be achievable for most of us. But what you just said there does remind me of, I think Mike's tweeted a few times. He says that the first question he always asks someone is, "Could you have been bigger?" Whenever they talk to our traders, could you have been bigger? I guess that's what happens when you run the firm. You're like, could you have been bigger, please?
Yeah, unless they're losing in the trade, then it's a bit smaller. Absolutely. No, I mean, I think that's a little bit of the standard on our desk is, and people will push back against, Bella asked that question and people will push back. They're like, listen, at this point in my development, I did the exact right thing. I was the right size for me. At some point I will be getting bigger, but consistency is most important for me right now. And so that's where things like maybe just throw on another 10 shares next time or something like that. That's where that stuff really does come in. And there's a balance point. He does ask that question constantly of traders, but he's humble enough to get that feedback of, Bella, if I was any bigger here, I would have totally effed it up. And I'm just happy that I took that trade. Can you please give me a little slack here? But we're all at different points in our development, and even as people go up the curve, there are little momentary spots where they go into a little drawdown, or they're not seeing things very clearly. And the goal there is just get consistency back. Go back to your baseline strategies, those things that are going to generate you, a baseline amount of P&L each day. For traders on our desk, some traders will try and make 20K a month in just their baseline strategies, their scalps. And if they're doing that, then, hey, if I get an A+ opportunity, maybe I'm putting it to 100. Other traders are 400K a month in their baseline strategies, and then, hey, maybe if I get a good opportunity, then I'm going for $1 million, right? Like those are things that are really important to us on our desk is you have to have that baseline, and then you have to be looking and thinking, what would make this an A+ setup? Not putting on A+ risk unless it's really there, but thinking about what would turn this into an A+ trade.
Yeah. And I think that's a really good question, actually, and that's a question I often just ask myself is, what would make this A+? But I try and temper that with as well that sometimes on its journey to becoming an A+, there's likely to be a B setup, and you still got to take that. And that's sometimes the hard thing, because you still got to take that B setup. It's still a setup. It's still giving you an entry signal. And then you've got obviously taken that loss, transitions to an A+, or it could you could take that loss, transition to an A+. Then all of a sudden you've got to I got to deploy more size here when I've already taken it out. And that's something that, just for me personally, I've always found quite hard.
You don't get more excited about the A when it turns into an A+?
Oh yeah, I do, but then it's just that for me, I don't know, maybe that's where I'm risk averse, and it's definitely one of my flaws is that I'm already like, shit, I've lost a fair amount of money already.
Yeah.
And now it's like, okay, now it's time to, and I remember that with the trade back last year, and when we had trying to think like the Japanese, where the Japanese
trade, the carry trade, yeah.
Yeah, and then we had obviously like Apple, like all these good companies, just absolutely huge gap downs. They're flushing at the open, and it was just like the most beautiful setup. They literally cleared out pre-market lows and then just ramped pretty much for days, actually.
Yeah.
But I remember like I was trying it in pre-market, and I was already like drawing down quite a bit. And then when that A+ set up, I was like, don't get me wrong, I deployed risk. But if Mike turned around to me and said, "Should you have had more size?" I wouldn't be able to give him a humble answer. Would have been a lot more.
Yeah.
And that's been difficult for me. I don't know if that's something that you see a lot.
You were a rugby player, right?
Yeah.
Yeah. So what happens? Did you ever get on a breakaway?
What do you mean?
Like it was you, like the ball gets, I don't know that much about rugby. I've watched it a handful of times, but the ball gets thrown in a line, right?
Yeah.
You can't forward pass. You can only kick it.
Can't forward pass. I mean, my job is I literally run at people. I get the ball and I run at people. And
So here you go. Okay. So this is what happens. Let's imagine this from a trading perspective, right? So you get the ball and somebody's out of position, right? You get the ball and there's one person between you and it's called the goal, right?
Yeah. The try line. Yeah.
Try line. Yeah. There's one person between you and the try line, and it's a pretty big dude. That's like a B setup, right?
Yeah.
Like, you probably could take him on, but are you going to be thinking, I'm going to run him over and I'm going to go for it on this one? Or are you going to be thinking, I'm probably going to get tied up, so I need to be thinking pass?
Yeah.
You're probably going to be thinking pass. What if it's like what's the position of the smallest player on the team?
Like scrum half or fullback. Yeah.
Yeah. So what if it's the fullback? You're going to deck him.
Yeah.
You're going to completely level him, and you're not thinking pass the ball at all. You are thinking, this is my moment. I'm going to show up on an ESPN highlight reel. I'm going to be clocking a kid and running in for the try. This is going to be amazing, right? Like, think about how that just got trained into you over time.
Yeah. That's such a good
point. Like, the reality is you're sitting there looking at that big guy and going, in that pre-market price action where you're like, okay, I know I have to be a little tight here. And then you get that little guy right there and you're like, oh, I'm going to pass the ball. Like, you gotta live for those moments. That's what we're all doing here. We're living for these moments.
Yeah. And that's ultimately going to be like, that's such a big flaw though, that's like, in terms of like what can like prevent you having, like, we're talking about this, like just offline, we're saying like missing, like there are some times where you get like those weeks or a couple of weeks. It might even be sometimes like quarter, half a year. Whereas if you don't perform within that set time, your chances of having a PR year just go out the window. You've got no chance, because it comes down to those key moments, like that trade. I know like Lance made a ridiculous amount of money that week. Probably why I was able to go to Miami. He made so much money. So it's like, to be able to step up and do that. I mean, I don't, I do think there's an element of difficulty there, but maybe I'll think about that next time. I'll be thinking about that little fullback in front of me, and I can see your eyes light up where you're like, oh yeah. And I think that's the same. We all have different experiences in our life that we have to remember that are outside of trading that come in. All of us have those moments in our life where you've been able to perform, when you've been put in those positions and you knew instinctually what to do. The same thing happens in trading, but a lot of times it's hard because we're thinking about the score. We're thinking about taking that rip. Yeah. We're associating that with something that we believe about ourselves. We're telling us this crap story that,
hey, listen, I'm not the one that's been able to capitalize on this A plus, so I really need to do it. No, just think back in the times of your life when you've been really good at something, and maybe you hit the game-winning shot in third grade basketball. It doesn't really matter what it is; it's all the same psychology, and you just have to enact that psychology one time, just once in those big moments, and it's really easy to do once you've done it. But you do have to kind of be there.
It's a funny concept, and it's funny actually in rugby. Like I'm typically one of the largest players on the pitch, but like you're also trained to look for those A plus collisions. That's how you figure. It's like, it's stupid. Why would you run into? You see a brick wall. Why would you run there? You don't. You run into somewhere where you think actually there's a space, a loose shoulder, someone smaller. So I mean, it's a great comparison. We are coming up to the hour mark, and there's a couple of things I desperately want to chat to you about. The first, and this is something that I talk about a lot, and I don't know if we still say the devil is in the detail. I don't know if that's still a common phrase, but there's certainly the power of details in trading. And I'm just interested in your take, how nuanced in those nuances, how the small details can separate, an average trader from a really great trader.
Yeah, I think it comes down to what your baseline trades are. I mean, like if you're not diligent with what your baseline trades are, it's really hard to be extra diligent with what your A plus trades are. And so we're always looking at what's the volume doing, what's the tape doing, what's the setup, right? What's the technical setup, basically? What's the catalyst? Is the catalyst technical or fundamental? And then what's the price action doing? Not just the tape, but the chart as well. What does that look like? All of that comes into, basically you're asking yourself the question, are the people that I expect to be here in this trade, and acting the way I expect them to act? And that's all of those things come in details. And some people use indicators, and that's great. And some people use, all sorts of random things. I know there's people that use different visualization software for their tapes and stuff like that.
Yeah.
But, I don't use a lot of that. I'm really just constantly looking for what, answering the question, are the people that I expect to be there showing up in the way that I expect them to show up? And if they are, then that's important. But that has to be on your baseline trades too. Because if you can build that on your baseline and you can be that diligent with your baseline, then all of a sudden the A plus trades get a lot easier to do.
And as like a takeaway from, there's loads of takeaways from today, but as a takeaway from today, do you think then that the average trader could learn or be more aware of the nuances of their baseline then in order to perform better?
I think that's actually the place to start. I think a lot of people want to only focus on the A plus opportunities, and I think that's really good to do that. It's obviously baseline plus A plus equals your trading career. But I think if more people were focused on the baseline, it's certainly an emphasis for me and for us on our desk this year is to focus on the baseline more. If we focus on the baseline trades and have a really high standard for those, then it's going to be a lot easier to focus on the A plus opportunities. You really do have to hold yourself to a high standard, because you don't want to let that B trade slip into a C trade and you're kind of not paying attention to it. And then all of a sudden, you put yourself on your back foot for no reason. You really do want to be diligent with your baseline trades.
You touched on as well, like, say you got someone averaging 10K from their baseline, that then they know then they've got that 120K pretty much. I don't want to use lot, but you know what I mean. That then enables them to go, okay, I can risk 20K on an A plus or whatever. They've got, it's not just that baseline setup, but they've also got that baseline income as well. And that leads to better performance. Yeah,
it allows you to bet more optimally. And that's really what trading comes down to, is your bet sizing, or is your bet sizing lined up with what it needs to be? And just having that baseline allows you to bet more optimally. It's a lot easier to increase your risk by, maybe you're risking 2 weeks worth of your P&L, much more so than it is to risk, 5 days worth of your P&L and all that stuff. There are times that require more risk and you want to bet optimally, but you have to kind of respect where you are. And so that's where that baseline really does help you bet more optimally when you get those bigger opportunities.
Yeah, that's such a great point. And lastly, I mean, it's been such a. I must admit, I do really enjoy our conversation. So thank you again.
Of course.
I'm just keen. So, I know you obviously in your role as well. There is the sad part of obviously people are let go. One of the most common mistakes then that you see a lot of people make, and then how do our viewers and go about avoiding those?
Yeah, I mean, that's the worst part about anything that we do. Whenever you see someone come in and not find success in the intraday trading space, that's a really tough thing. And I struggle with that. I lose sleep over it every time. I really do. And the thing that's been interesting is the people that don't succeed at the intraday space tend to go on and do really great things in other areas of finance. We have some traders who didn't make it in the intraday space that are working at really very, very, very well-known hedge funds now and doing quite well doing that. They're not necessarily portfolio managers, but they're on their way to doing some really great things. And so I do think trading in general allows you to build skills that are going to serve you very, very well. And I think that's the tough part. When somebody isn't successful at our firm or in the intraday trading space, if they've really worked hard at being as good as they can be in that space, they're going to be able to transfer those skills to so many different things. And, maybe that isn't the right thing for them. Maybe the intraday trading space isn't the right thing for them. That doesn't recognize their talents in that way, but they've developed talents. And you do have to really remember how much this is a talent and skill development game. And, we are all really lucky to be able to participate in this space and be able to trade, to challenge ourselves every day, to be working on those little things that seem impossible. Even in that moment when you're thinking, oh man, all right, Jeff said get 10 shares bigger. Like, I don't know if I can do it. Like, but you're going to challenge yourself, and that little victory starts to build some really cool momentum. And that's a lot of what we focus on when people don't make it, is what is the momentum that they have built? Where are the things that they were doing something really well? If somebody isn't going to be successful at our firm, we probably have a lot of confidence that they'll be successful somewhere else doing something else. But it does hurt, and it is sad.
Yeah, I can imagine I'm sure that's the toughest bit of anyone who has that role. I'm sure that's the toughest part of a lot of people's lives. And but it must be reassuring that they're still developing and gaining a skill set through SMB that's empowered them for they're likely to be young.
I mean, look, it's through trading, right? Like SMB, we just have a unique style of trading. We do a specific thing, and we work really well with people. We really try and help them develop and grow. But it's really through trading, it's through markets. As much as it might be viewed as through SMB, we're all just exposed to the markets, and we get to trade the things that are presented to us. And so that's really what it comes down to is if somebody's growing and getting better, it's because the market is giving them the opportunity, and they're stepping into that and doing the right work.
Yeah, absolutely. And then just two more questions. I see that Max is in your corner. What makes him, obviously he's immensely successful, what makes him so different and people at his level so different from those perhaps the levels below? The
speed of their idea generation.
Is it?
Yeah, the speed and the quality of their idea generation. Max and I flew to Vegas together, and we were just sitting there, and for like 5.5 hours in the plane, we were talking through different scenarios of, okay, if this happens, well, this would be the trade, and here's kind of where the risk would be. And if this happened, then this would be the trade. But what if this didn't happen, or what if that variable happened? So the speed and the quality of the idea generation, it's just, that's really the standard that you want to have for yourself.
Oh, impressive. And then lastly, just one key lesson that you wish every trader would understand. Put you on the spot there.
I know. Oh, that's an interesting question. One key lesson I wish every trader would understand: you probably know more than you think.
Yeah.
Like, forget about everything else and everything you read and have heard on CNBC or heard in chat rooms or whatever. Like, when it comes down to it, if you've had even a little bit of screen time, you probably know more than you think, and you're probably better prepared to put on more risk than you think. a lot of times, when it's not the right time, and you have to kind of ground yourself, and it's not the right time to put that trade on, just as much as this is the time I really need to challenge myself, and I need to get 10 shares bigger. I need to get, I need to add a zero and press the button twice, or whatever it is. Most traders know way more than they give themselves credit for.
Yeah. I mean, on that note, that's such a positive way to end this conversation. Thank you so much, Jeff, for your time. Really appreciate it. I absolutely love our conversations. Just lastly, where can people find you? Is it just SMB on the YouTube channel, or is it anywhere else?
Yeah, that's usually the best place to find me. I have an X handle, but I keep it pretty private. And just so I can communicate with traders and stuff, like traders on our desk and stuff like that. But you can, I think there's a lot of stuff on our website, and then I'm always trying to post content, always trying to add value. Things that I see, every video that I've ever done and will ever do is really directed at one person. So there's always somebody that I've met or interacted with, or a trader on our desk or something like that, that's inspired every single video we've ever done, for at least I've ever done. And I'm always thinking about them when we're putting it together and shooting it. It's lessons that I wish somebody would learn, this one person in particular. It's never the same person, but it's just, there's always somebody that I'm thinking about behind those videos, because we've seen something that could help them get better over time. And so, maybe there will be a video about you someday. We'll see.
I was just thinking that. I was thinking there's going to be a discussion, and you'll probably change the sport to basketball or something, and it'll be something about he's missed open shot. I don't know, something like that. And it'll be actually in that moment you're better trained and you know what to do. I could see that video coming, and I look forward to it.
Yep, we'll see. I'll have you on if we do it.
Yeah,
we'll have you on, but you have to wear your rugby uniform.
I'd love to. Yeah, absolutely. I'll send you some. I'll send you some videos of me playing rugby. It's quite.
I'd love to see it. That would be fun.
Thank you so much again for your time. Thank you for all you do for the community as well. Really appreciate it. All the videos, the content that SMB puts out is great, and I know we all really appreciate it. So, thank you so much for your time, and we'll speak soon. Thank you so much.
Thank you.
Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.